All right, so now understanding time frames actually help you to simplify things in the market. Okay, in your trading journey, time frame will help you to simplify things. Time frame will help you to ignore the noise and use the correct date for your trading objective. Whatever your trading objective is, time frame will actually help you. The goal is to match a time frame with a business. All right, trading is your business. Treat your trading career or your trading journey as your business. So you match a time frame with a particular whatever goal you want to achieve in your business. All right, and just as I said earlier, this will help you to ignore the noise in the market. As I've shown you earlier, we have time frame ranging from 1 second to as higher as the yearly time frame and all of that. Okay, but the time frame I want us to focus on is the 1 hour time frame. Okay, we'll look at the 4 hours time frame, we'll look at the 8 hours time frame, and then the 12 hours time frame and the daily time frame. Okay, so these 4 different time frame on different chart actually determine the kind of trader you want to be. If you are going to be a day trader, if you are going to be a swing trader, or you are going to be an investor. All right, investors are those who trade for a longer time in the market. People can buy Bitcoin at 20,000, at 21,000, and they are waiting when the market will get to 50,000, okay, before they can sell. Those are investors. Swing traders are those who can hold trade for a longer time, maybe a day, 2 weeks, 3 weeks, or a monthly basis. Okay, and then day traders are those who look at the shorter time frame. Before the end of this today, I want to get results from my trading and all of that. All right, so when we go to the 1 hour time frame, okay, on the 1 hour time frame, the 1 hour time frame provides data, okay, for the next 24 to 48 hours on trading view. All right, the data that you see when you zoom out of the chart on trading view, the data you see there is a data of the next 24 to 48 hours. Okay, and this will give you an average of 18 to 20 trades per month. If you want to be trading solely on the 1 hour time frame, the 1 hour time frame, based on the data you are going to get from the 1 hour time frame, 1 hour time frame will give you an average of 18 to 20 trades per month. So it means that whenever you spot the opportunity on the 1 hour time frame and you are taking a trade, I'm going to show you a tool you will use to do that. Okay, a very simple tool. All right, whenever you spot an opportunity in the market to trade on the 1 hour time frame, if solely you are going to depend on the 1 hour time frame, right, whenever you see this opportunity, you can get up to 18 to 20 trades per month. All right, you can get up to 18 to 20 trades per month. All right, so just base your decision now whether you want to be trading with the 1 hour time frame. And remember, the higher the time frame, the more or the bigger the opportunity to make profit in the market. All right, if we go to the 4 hours time frame, the 4 hours time frame gives you data for the next 3 to 5 days. All right, when you zoom out of the chart, okay, the 4 hours time frame on the chart gives you data. You can see data to work with or to analyze the market with for the next 4 to 5 days. Okay, now when it comes to trading, you can get an average of 6 to 8 trades per month if you are going to base your decision to be trading using the 4 hours time frame. You can get only 6 to 8 trades per month. Okay, 6 to 8 trades per month, which is a bit less than what you get on the 1 hour time frame. The higher the time frame, okay, the more the noise you reduce in the market or on the chart to see clearly. Now, when we go to the 8 hours time frame, the 8 hour time frame gives you data for the next 6 to 8 days. Almost, that is a week data. You can view a week's data on the 4 hours time frame. And if you are going to base your decision to trade in the market, okay, with the tool that I'm going to show you, it means that you can be taking an average of 4 to 6 trades per month. Average of 4 to 6 trades per month. Okay, no more, no less. So if you just base that, oh, I don't want to be, scalping the market. I just want to see an opportunity on the 8 hours time frame and trade the market. Then what that simply means is that you are getting data for the next 1 week, and you can only take 4 to 6 trades per month. Okay, on the 12 hours time frame, 12 hour time frame gives you data for 10 to 14 days. Okay, for 2 weeks, you can look at the market in a go on one chart for the past 2 weeks, right? The data you see on the 12 hours time frame is for the past 2 weeks. And then if you base your decision to trade the market on the 12 hours time frame, what this simply means is that you can only take 2 to 3 trades per month. 2 to 3 trades per month. That is what the 12 hours will give to you. And because you are doing this on the 12 hours time frame, don't look at the number of trades you take. Even if it is one trade you are taking, okay, it's going to even give you even more of what you should be expecting when you are taking 18 to 20 trades using the 1 hour time frame. And finally, the daily time frame gives you data, okay, for the next 20 to 30 days. When you are looking at the chart on the daily time frame, you are looking at data for the next 30 to 20 days. An average trade you can take on the daily time frame, all right, is just 1 to 2 trades. If you just base your decision on the daily time frame, you can get 1 trade in a month, you can get 2 trades in a month, okay? And if you are using, for instance, the RSI, at the overbought level on the daily time frame, when you buy at the overbought level, at the oversold level, before it gets to the overbought level, it is already a month or a number of days, 20 days, 30 days plus. Okay? So with that, with the daily time frame, if you base your decision on the daily time frame, as a swing trader, you can only take 1 or 2 trades per month. All right? 1 or 2 trades per month. And whatever you make here will equally be almost equivalent to taking like 20, 50 trades on the 8 hours time or the 1 hour time frame. All right? So you can take a screenshot of this and, try to memorize it on your own, okay? Just take a screenshot of this and try to memorize it on your own. Just know that on the 1 hour time frame, you are getting data for 24 to 48 hours, and you're expected to take or see opportunity to trade the market for like 18 to 20 times in a month. 4 hours, you get data for 3 to 5 days, and you can take trades up to 6 or 8 trades a month. Okay, the 8 hours time frame, you get 6 to 7, 8 days data, and you get 4 to 6 trades per month. 12 hours time frame, you get 10 to 14 days data, and you get 2 to 3 trades per month. And then on the daily time frame, you get data for the next 20 to 30 days, and you can only trade 1 or 2 trades in a month. Okay, so let's jump right to TradingView. Let's jump back to TradingView. All right, so here we are on TradingView, and this is the 1 hour time frame. So it means that any candlestick you are seeing here, it took the candlestick 1 hour, okay, whether big or small, it took that candlestick 1 hour from when it opened to when it closes. Okay, I believe we all understood the basics of what makes a candle green and what makes it red. Okay, now every candlestick there have 4 components. Okay, where it opened, where it closes, the high, okay, or the high that candlestick or that market, the market went to on that particular period, and then the low. So what makes it green is that the candle will always open below and then closes above the open price. Okay, if the market opens there, it always closes above. When it closes above the price at which it opened, that is what makes it green. Okay, and then when the market opens up and it closes below what it opened at, that is what makes it red. All right. Now the wicks you see here, which are these in tiny lines you see here up and down. On the green candle, it means that the market opened somewhere around here, the body at the bottom here. It went up to as high as where you are seeing this line here. Okay, it went up as high as this, and then came back and closes here. Okay, then the wick below, it means that when it opened, it came down below here. This is the low it went to. All right, which is why I say there are 4 components in a candle. The body, okay, tells you where the market opens, when it closes, and then the wick is how high that candle, the market went to in that candle, and how low the market went to. Okay, that is what makes a candle. But back to understanding time frame. So if we are using the 1 hour time frame, all you need, okay, a simple tool you need to understand this better is the stochastic RSI. Just go to TradingView, go to indicator, and just type in here, please save this somewhere, stochastic. Okay, just type in here stochastic RSI, this one. You can favorite it so that you always see it on your favorite here. Just click on this star to favorite it. It is called stochastic RSI. just add this up to your chart. But let's assume that we bought here when the RSI, okay, you see that, let me just open this up for you to see, okay. You see these two orange and blue line, okay, you see where it crosses over here. This is an indication that the market is about to reverse, okay. And then when it gets to the overbought level, you will equally see the blue line crossing over the orange line. And what happened? The market eventually came down. The same thing, okay, you see here. Just check it. When the market is overbought, a crossover happens, it comes there. And then when it is oversold, a crossover happens, it goes up, and all of that. So when you now apply that idea of the time frame to the chart, it means that you are only waiting for you to buy when the market is overbought. Okay, when it's overbought here. So here, if I bring this, let's say at this point in time, okay, when this stochastic RSI is at the overbought level, we are now looking for an opportunity to buy. Okay, if you have bought here, all right, it means that if you sold, let's say somewhere around there when it was over, yes, this area here, when it was now at the overbought level, okay, it means that you would have made 2.6% in the market. All right, you would have made 2.6% in the market. Now, when you are using leverage, this 2.6% is without leverage. On the spot market, you would have made 2%. So it means that if you have put $1,000 in the market, you would have made 2% of $1,000. Or if you put $10,000 in the market, you would have made 2% of $10,000 and all of that. So if you now use leverage, let's say we are using our normal 10x leverage calculation, it means 2 times 10. Okay, you are now calculating 2.6 times 10. That is exactly what you are making when you are using leverage. All right, and this will not always work out the way you want it. Okay, at the overbought level, let's say you bought somewhere around here, the market would have dropped. Maybe you would have waited until this area somewhere here, or even at this long week here. Okay, when the market is ranging, you don't do anything. You only wait when the market, is actually moving up and down. At this ranging, you see that this is not going to the overbought, it's not going to the oversold, so you don't buy here, right? But here at this point, you would have bought somewhere around here. Though the market went above what you bought, but you would have bought somewhere around there. And here, when it came down, you would have sold, okay? You would have sold somewhere around there. So let's say you bought here, somewhere around there, and you sold here. That would have given you some percentage in the market as well. Okay, which is why you must always do your calculation about 1% move in the market. You must always do your calculation where your risk tolerance should always be how much you are ready to lose and how much you are ready to make. Okay, so with the 1 hour time frame, you can get up to the 18 to 20 trades per month. Then when you go to the 4 hours time frame, the chart is more clearer. Okay, on the 4 hours time frame, the chart is more clearer. You can see when it was overbought here. And then you would have waited and to the oversold level you buy, sell at the overbought level, you wait again, okay, oversold level you buy, sell at the overbought level, and all of that. All right, this is the data what 1 hour or 4 hours can give you. Now the ranging here could take some time. All right, when the market is ranging, the market can be at the overbought level for some time, just like here. Okay, it can be at the overbought level for some time. All right, before it goes either downward or it continues to go up and all of that. Okay, so and then on the daily time frame, you can see it here. All right, so this market was overbought at this level, and then if you have bought here, you would have sold somewhere around there when it was oversold was here. Okay, if you have bought there, you would have sold somewhere around here, and you would have made some profit, and then wait for the market to go down again. Okay, then if you are trading leverage, you would have shorted at the overbought level, and then long at the oversold level. So you short at the overbought level and then long at the oversold level and all of that. So you can use the stochastic RSI to make decisions in the market and know what you're making. Now, the fact that I want you to base your decisions on a particular time frame doesn't mean that you don't need to look at the higher time frame. There is need for you to look at the higher time frame to see the overall trend of the market. Okay, the reason why you want to look at the overall time frame is to see the overall trend of the market, to know if it is the exact place or exact time you want to buy or you want to sell when looking at your time frame. Okay, so on the I think I have my moving average here, the 200 moving average. If I go ahead and activate this, okay, the 200 moving on the 200 moving on the weekly time frame, the 200 moving average. With what I'm seeing here, we are still on a higher time frame, okay, because this market just retraced to touch the 200 moving average. So the 200 moving average line here, this blue line, is now serving as a support, okay. So it means that there is every probability that we can bounce from this support right here and continue upward, and there is equally a higher chance that we can actually break below this, right? We can actually break below this and all of that. So understanding time frames and knowing how to leverage on it, coupled with the stochastic RSI, it will help you to make some decisions that can profit you in the market going forward. I don't want to bug us with too many things, but I just want to pinpoint all of this so that it will help you start, rearranging your mindset, your trading mindset, and all of that. Okay, knowing all these things will help you when a signal is sent to you. You equally analyze the market yourself. Okay, the same thing I've shown you, you can see all of those charts on the BYBIT exchange. Okay, I equally use, this is the stochastic RSI, as you can see here. Just go to indicator on the exchange here, go to indicator on the BYBIT exchange, and then you type stochastic RSI. Now, if you only have access to phone, you will not be able to get access to the stochastic RSI. If you are using phone, you will not be able to get access to the stochastic RSI. Okay, you can only get access to the RSI because on the phone, on the mobile app, you have limited, there is limit to the number of indicators you get. But when you are using a desktop or a laptop, you have access to all of these indicators and all of that. Okay, so if you are using your phone, there is need for you to use TradingView, because on the TradingView app, you have access to all of these indicators. But on the exchange itself, there are limits to the indicators that you have access to. So you can see my RSI, stochastic RSI plotted here. So I can use this to make decisions in the market, to know when to buy. I can buy BTC around there and sell somewhere when it goes up and all of that. Okay, and then you can switch between the time frames to know which time frame you want to work with and all of that. All right, I hope we all understood this. At this point, I'm calling it a day. If you have questions, you can go ahead and scatter my head with your questions. Okay. All right, let's get it rolling. Any question, or we all understood everything I've explained here?